These are the infinite banking best practices that I wish I'd known years ago when I was coming up on policy anniversaries. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. In this video, I would like to share best practices as you're coming up on a policy anniversary date. I'm here to share my own experience, speed up your learning curve, hopefully help you to see even better results sooner, faster, longer because of knowing these things and applying them. First, I'd like to begin by just sharing some simple but powerful updates or changes that you may want to consider as you're coming up on a policy anniversary date. Soon, then we'll talk about what you should consider doing after a policy anniversary date. But let's say you're coming up on a policy anniversary date. First, let me say congratulations and happy policy anniversary, of course. And then in the next breath, I want to say something about making sure that your personal info is up to date. Do you need to make an address change? These are small, but they're very important. Remember, these are important financial documents that you have. So do you need to update any of your personal information? If you've never logged in to an online portal, for sure, it's a good time to do that. I personally have made phone calls, of course, for making policy loans, paying policy premiums, etc. But it's nice to be able to log in online and stay on top of your information, of course, there. Next, think about the roles associated with your policy or system of policies. Do you need to make any changes or updates to beneficiaries? Do you need to add a beneficiary? Do you need to make a contingent beneficiary? That's something that I wish I'd known sooner. So not only can you have a beneficiary or beneficiaries on a policy, but you could have contingent beneficiaries. So consider adding someone there if that's appropriate for you. Also, you may want to add a contingent owner. So let's say you own a policy on someone else. An example right here could be I own a policy on my child. If something were to happen to me, I would, of course, want my wife to be the contingent owner on those policies because it's not on me. So my wife would have been getting a death benefit on my policy, but the other policies that might be under my name that I might own, I would want her to be the contingent owner of those policies, like on our minor children, for example. So just be thinking about, do you need to add any beneficiaries or contingent beneficiaries? Do you need to add any contingent owners on any policies that you own or update those roles? Another, and I'll just mention it now, we'll probably talk about it more here in a moment, but do you need to update or change your dividend election? So when you earn a dividend on your policy or policies, you can use that dividend for different things. You could reduce premium with it. You could, I'll go ahead and mention this one here. You could use that dividend in the marketplace, and the insurance company will actually send you a letter once a year. The insurance company will send you a letter saying, hey, do you want to use your dividend towards this index? I throw that in the trash. I don't do that. I don't encourage you to do that. What I want my dividends to do is to buy more paid up insurance. That means that my death benefit goes up. That means that my cash value goes up. That means I can do more banking, more compounding is going to happen. That's what I want to do during my banking years, my active banking years. Now, there may come a time where passive income time of life, retirement age time of life may give us options that we would prefer for those dividends to do other things like offset premium, or we may even want to check in the mail. So there are different options that we have, but I'm putting that in your lap. I'm here to empower you, encourage you, and cheerlead you on to being your own banker. Do you need to, this is just something to be aware of, do you need to make an election change on what you want your dividend going to? The default should be buying more paid up additional insurance, but you make that call for yourself and look at that year over year as time goes by and things change. Another thing to consider as you're coming up on a policy anniversary date is that may be a time when you will want to change your premium mode. So perhaps you started out paying your policy monthly, but as you've been banking with that policy and you've begun recapturing inefficient dollars, perhaps it's more feasible, or you would just prefer to pay quarterly or to pay semi-annually or annually. At your policy anniversary date, that's when to make that change in most cases with most companies. So be thinking about if you want to make a change to your mode of premium. The next question is it time? Do you want to RPU a policy, reduce paid up a policy. Again, this might be a topic that we will discuss more as we keep developing our conversation towards passive income or retirement age of life, because reducing the death benefit of your policy is worth a conversation for sure. And you should be having those annual ongoing conversations with your agent, with your advisor. Do we want to reduce the death benefit on this one particular policy, perhaps to be able to forego paying any more premiums out of pocket? So that's a very relevant thing to ask yourself as you're coming up on an anniversary date, just depending on where you're at in life and in banking. But recollect that that is an option that you have. Once a policy has been in force for a certain amount of time, it is possible to RPU that policy, reduce paid up. So the policy would be paid up. The death benefit would be reduced, of course, because there would be no more ongoing premiums. So this is another topic to remember and consider at anniversary time on a policy. Is that part of your strategic plan? Is that something that you want to do or perhaps even need to do? And I say need to do because that ties into the next item of consideration, which is the MEC status of your policy. It's good to every year, of course, get an updated in-force policy illustration. That'll be something you'll want to do after the anniversary date. So we're about to make that transition here soon. But after your policy anniversary date and you're in a new year of your policy, that's a good time to have an updated in-force policy illustration. But keeping a pulse on any potential MEC status with your policy is important. And that's, again, a reason why you would RPU a policy. And there could be some others as well. But what's the MEC status on your policy? And then do we need to RPU? Those could go hand in hand. The next issue concerns your paid up additions rider. So a few questions here about your paid up additions rider. Did you at least pay the minimums to be able to maintain the paid up additions rider on your policy? So most companies are going to require a minimum. It may be something like $10 a month as the minimum, or whatever the case may be. You should be familiar with your contract. Please be familiar with your contract. Look over that for yourself. Look over that with an agent or advisor that you're working with. But did you at least pay the minimums to be able to maintain that paid up additions rider? Because that's the flexible portion of your premium. That's the portion of premium that goes towards creating an early liquid cash value in an infinite banking style policy. So did you pay your minimums? Next question is, did you pay all the regular scheduled premiums, whatever you had initially chosen to be able to do? And then thirdly, did you pay extra? Do you want to pay extra? So at least once a year on all of my policies, I'm calling the insurance company up, or I'm contacting the insurance company to find out how much extra can I pay on each of these policies. And that could change on a monthly basis. And that's why I say at least once a year, I'm contacting the company to find out what's the most I can pay as extra premium into my paid up additions rider that's going to maximize my cash value, that's going to be growing my death benefit, all of the above, without, and here we go back to that MEC conversation, without MECing my policy. So I want to pay as much premium into as many policies for as long as I possibly can, always. So did you pay the minimums on your paid up additions rider? Did you pay the regular scheduled amount? And if you did, can you pay extra? Do you want to be able to fit some extra into that paid up additions rider? Because the death benefit goes up, the cash value goes up, and you could do more infinite banking. Now, when it comes to the paid up additions rider and paying extra into your policy, I'm just going to try and prompt you here to consider some things that you might not have before. Did you get a tax refund? Did you get a Christmas bonus? Did you have some form of an inheritance or a windfall? Or have you been banking so efficiently that you have just had too much money stacking up under the mattress or in the regular checking account or somewhere else that's not getting into the policy or your system of policies? These are just some things that I hope will prompt your thinking about how you can be more creative and more intentional in capitalizing your private banking system by paying as much extra as you can to be able to maximize your results sooner, earlier, faster. As you come up on your policy anniversary, policy loans are a relevant conversation. So firstly, did you at least pay the policy loan interest on any outstanding policy loans that you had made. And I'll just go ahead and tell you, here's my personal prioritization on cash flow to my policy. First and foremost, this is the big picture. First and foremost, I want to pay my regular scheduled ongoing premiums. Base, PUA, all of my regular scheduled ongoing premiums. Term, if there's term, I want to pay those. Two, my second priority is I want to pay that extra PUA that we were just talking about. I want to put as much capital as I can into my private banking system. Third, this is what we're talking about right now. Even if I have an outstanding policy loan, and I know that I'm going to strategically maintain an outstanding policy loan because I'm paying off something, paying for something, I'm financing something in my life, I still would like, here's my third prioritization, to pay that policy loan interest so that policy loan interest doesn't compound into the outstanding policy loan balance coming into this new year after the policy anniversary. That's my third prioritization. And the fourth is the policy loan itself. We want to be a good banker. We don't want to steal the peas. We want to be an honest banker with our private banking system. We want to be paying back policy loans, or of course, constructing a plan on, well, once this thing is paid off that we've used these policy loans for over the next 24 months, then we're going to be refilling that reservoir back, being an honest banker, restocking the shelves, if you will. That's a book reference. And of course, I'm going to say this is a good time to mention that getting into the book once a year is a good idea. We'll come back to those suggestions here in a second, but I'm going to go ahead and say it while I'm thinking about it. Restocking the shelves, that's a book analogy right out of the book, of course. Filling that reservoir back up, putting the principal back into our system for the next thing that we're going to do. So have we paid policy loan interest? Are we, or do we at least have a plan for repaying policy loans themselves as well? And for those of you that this would be helpful for, if writing something down, writing something out, printing something off, putting your signature to it. If something written, some of you might like using Excel sheets. Some of you might have a handwritten journal like I do. Whatever the case might be, you're your own banker. And I'm just encouraging you to be an honest banker. And if having a plan, something in writing is helpful to you, then by all means, write out a promissory note to yourself. Sign that, date that, have some terms, have some plans on what that's going to look like for you, if that's going to be helpful. And it probably is for almost everybody. And I've still ended up making all kinds of mistakes along the way myself, having implemented this concept for going on a decade now at the time of this recording, which again is part of the reason for this recording. I want to share best practices. I want to share my experience. I want to share these points and suggestions and considerations and questions that I wished I would have had somebody asking me and prompting me with in a nice condensed vehicle for me to be able to revisit year over year and improve my results. So I hope that it's doing exactly that for you. And if along the way you have any thoughts or suggestions or further questions, of course, put those in the comment section below and I will respond to those. Suffice it to say, at the end of the day, mistakes and all included, it's been better of these past 10 years having been my own banker, having maintained the control and the profitability over the banking, over the financing that we've done as a family in our business with investments across the board, mistakes and all. It's better to have been our own banker. Let's make a transition now and talk about some things that I believe you should consider or ask yourself after the policy anniversary date has passed. So we've already addressed changes, updates, additions, some last minute activity perhaps before the policy anniversary date. But once you're in a new policy year, I would encourage you to get a new in-force policy illustration. It's going to have some updated information for you that's going to be important and helpful to look at, actually. Now, moving forward, I'm going to ask you some questions such as, do you have a plan for a reserve amount of capital? This is just a topic that I wished I had considered sooner rather than later, because when my wife and I got started, our number one priority was paying off some debts and recapturing that. and we were doing max loans, and because we were really trying to move the needle quickly, and we did, and it was great. And yet what I found also to be true is that Murphy's Law exists, right? If something can go wrong, it likely will go wrong. And this is just really paying attention to one of Nash's human problems, which is the golden rule. He who has the gold makes the rules. So my prompt to you is this: is there a certain amount of capital, whether you put that to a dollar amount or a percentage, that you want to be able to maintain within your system, even at a bare minimum? Let's say you're doing some high activity with your policy. You're making significant policy loans to buy something, pay off something. Is there a certain amount that you want to keep as a reserve, as an emergency fund, as some opportunity capital? I think there are those two O's in life. There are obstacles, things that come unexpectedly, right? And then there are those opportunities, also things that can come unexpectedly, except for those that have read Nelson's book, that golden rule that we were just talking about. He actually says that when you have capital and access to it, you've been proactively, intentionally amassing capital for yourself, opportunities will hunt you down. But I think life is full of obstacles and opportunities. So do you want to have either a particular dollar amount? Maybe there's a dollar amount for you that you know, hey, this is going to be 2 months for us, 2 years for us of living expenses, or however you want to break that down. I'm giving it to you just in the form of a question. What amount of reserve capital might you want to maintain for obstacles and opportunities in the future? Now, a good status check when it comes to looking at your policy or your system of policies at an anniversary is considering this: how much of your cash flow, your gross cash flow, or your gross income is allocated as premium to your policy or policies? What's that percentage? What was it when you started? See, this might be your first policy, and that's your starting point. Great. It's just good to have a pulse on that, I think. What percentage of my gross cash flow is now going into this private family banking system? And then year over year, as you grow and scale what you're doing with a policy and building a system of policies, that should be ratcheting up systematically, reasonably, logically, okay? That number, Nelson says in his book, should eventually equal your total income. You can eventually, over however long it takes, does it take 7 years? Does it take 27 years? I don't know. You're going to pick for you. This is about you becoming your own banker. But that number should increase systematically over time to where your income is represented equally as premiums to policies that you own and control. Now, a golden nugget right here, I believe, is that I've heard where Nash would say that actually, when you think about it, your premiums can exceed your income. Here's how: dividends. We spoke earlier about dividends and all the different ways that you can use them. Well, dividends are above and beyond what you're earning from active income or passive incomes elsewhere. That's within your whole life policy. That's within your banking system. So that's actually a pretty neat thing, that even when you get to the point where all of your income is represented as premiums to policies, your premiums can really exceed that, because when you earn dividends on policies that you own and control, that's increasing the size of your system. It's just an amazing thing to really wrap your mind around. But keep a pulse year over year is my suggestion on what percentage of your cash flow is going towards your private banking system. And anytime that you have an expense that perhaps drops off, do you need to be reallocating that capital to the system? If you have a bonus, if you have a salary increase, if you change careers, you're in a new position, you're earning more, these are all instances where some expense goes away or some windfall or increase in income shows up, that you should be keeping that pulse on how much of your cash flow is going towards your system. So consider that. Also, for scaling and growing your system over a lifetime is, do we have any new family members? Was a child born? Did someone get married? In the business world, do you have a new business partner that you have an insurable interest in because of a joint venture? Whatever the case may be, investments, there may be some reasons there to consider getting a policy on someone. So has the family expanded? Is there just simply a new person that you need to get a policy on? In our family, it looked like this. I got a policy on myself within 6-8 months. We ended up getting a policy on my wife because it was a twofold expansion. One, we wanted the guaranteed death benefit on both of the adults in the family with young children. Naturally, of course, for sure. Everyone should be adequately protected. Let me actually interject right here. That's a good thing to review every year as well. What is your full human life value, and what percentage of that are you maximizing? What percentage of that, rather, have you capitalized on? I spoke with someone just earlier today, getting a whole life policy. They're going to be doing infinite banking, but we know that they're approved for another 1.5 million from the company. So we have this convertible term policy conversation where that individual could go ahead and lock in the rest, or however much they want, of that insurability now with term-like prices using a convertible term policy, but also with the guaranteed ability to convert that policy to whole life insurance built for banking purposes in the future, regardless of age changes, which there will be age changes, and possibly health changes and other factors. It's a good thing to keep a pulse on. How much can you qualify for in coverage? And then should you be expanding your system because you got a new family member, someone else is, married into the family, but also yourself. Revisit that every year for yourself. How much of my insurability have I captured for myself in policies that I'm either banking with now or that are convertible that I can bank with in the future, but I've got it locked in now. Keep a pulse on your insurability every year. But what I was saying was that my wife was the second person that we got a policy on in our household. And then we have 3 children. So we ended up getting policies after we had policies on ourselves on our 3 children as well. So we just had this natural expansion of our private family banking system, both because there were new lives that we wanted to have guaranteed protection on. Plus, we wanted to be creating these appreciating assets as soon as possible. And just so you know, 2 weeks old, if that child is 2 weeks old, we could be having our conversation about getting a policy on that child. So a natural progression should take place. Just like banks open up multiple branches there in your hometown, there in my hometown, they're on all the nice street corners. We grow out and we branch out our private family banking system by getting more policies when it's reasonably appropriate. And these are some of the reasons of when that might be appropriate. Now, for more information on convertible term, I would encourage you to reference my Encyclomedia series, episode number 12. That's where I cover some details on convertible term insurance. But of course, that's something that we could have in a conversation. But I would encourage you to check that video out. Then we can have a conversation. Either if that's something you'd like to consider doing, going ahead and capturing more of your insurability now while you're younger, healthier, etc. Or you may already have one of those types of policies. And again, that could be something that we revisit in a consultation call each year, realizing or ascertaining if it is an appropriate time for you to convert part of that insurability or all of that insurability into a whole life policy that you can be banking with. Now, as we look ahead after you've reached a policy anniversary year, maybe the biggest question is, what are you going to be doing? It's something worth asking yourself. What did we do? How did that go? What were your experiences? What were your results, etc.? And then consider, what are we going to be doing next? What's on the radar for the next 12 months? How are we going to be using our policy? And one big topic as you're looking ahead on how you're going to use your policy or system of policies could be, if you're getting closer to, and you've got it on the radar, the passive income time of life, retirement age time of life, that might be also a very important part of our consultation call each year. Is how close are you? How's your system coming along? How have you been banking so far? What are we doing with these policies? How does that play into your goals and your plans and your aspirations? What you want that time of life to look like? And I would rather have those conversations sooner rather than later. So if we need to have a conversation specifically about that, even if you're years away, it's good to just at that policy anniversary, while you've got that updated in-force policy illustration it's good to look at, okay, this is what we believe the timeline is looking like right now. This is how I've been using my policy. Here are my questions, Jesse. And if there's some resource that I can point you towards or some conversation that we need to have to be able to cultivate these results that you're wanting, I want to make sure to be able to do that. And that's, again, why it's so very important that at least once a year we should be touching base. We should be in each other's calendars. You can find me at durhamtalents.com or directly to my cell phone, of course, for those that have my number as clients. We need to be having this conversation at least once a year. Could be more often than it is with some of you. You know who you are. But at least once a year, we want to touch base on these things. Now, if you've seen anything of my Life Lessons series that I have on our YouTube channel, the first episode was on legacy. You probably know that we have regular family meetings in our household, and they are extended family meetings. And I bring that up for a couple of reasons. I think that's a good thing for you to consider each year, because as you are on this journey of becoming your own banker, it's a whole new world. It's a whole new paradigm. You've been red pilled and you're out of the matrix, and you're probably looking to bring others along with you, whether that's teaching your children, like my wife and I are teaching our children about how we've become our own bankers. And this is how we are doing things. And even our young children know that we're owning policies and using policies. And this is what we're doing for so many of the different things that we've talked about. And again, particularly in that Life Lesson series. So I would encourage you to check it out. But family meetings are something I'm going to encourage you towards considering and implementing. And I say that because in our most recent family meeting, I shared a visual where I had just drawn out the policies that we own and shown where this generation had these policies, and this next generation in our household, our children, had these policies, and here were the cash values, here were the death benefits, here's what our net worth was, here are what our outstanding loans look like, all these different things. Here are the dividends that we earned as of last year. And it was just a neat thing to be able to share that with them, to be able to paint the picture of what financial independence and autonomy in progress. We've not arrived. We're not finished. We're still on our way. It could get better. There are levels to implementing this concept. It's the infinite banking concept. And yet it's just a cool snapshot to be able to show this system that we've built over the past 9+ years now. And it's something that I wish I'd done sooner. So again, that's why I'm mentioning it here. I wish that years ago I'd shown what it looked like, because it's easy to overlook what the beginning looks like. But now, going on 10 years along in this journey, I wish I had more of those visuals to be able to look back on. I wish I had more of a collection of those family meetings where I was sharing those details. So as you come across your own information year over year, I think it's neat for you to be able to look at and appreciate where you're at and where you're going. And I think that it could be very inspiring to other people who would like to have more financial success. And it's a beautiful way to be able to celebrate where you've come to from where you were. Now, one of my strongest encouragements to you, of course, is at least once a year to rethink your thinking. That's Nash's 5th principle. And to be able to do that, I would say get in the Becoming Your Own Banker book again. Hopefully it's not the first time. Hopefully it's again. I've always returned to that book and seen something or been able to apply something that I had not yet. Get in Nash's 2nd book, Building Your Warehouse of Wealth. If you've never read that, highly encourage that. The book by Carlos Lara, Robert Murphy, that is called How Privatized Banking Really Works. That's a great book to read. Nash, in his Becoming Your Own Banker book, encourages you to play the cash flow game, Robert Kiyosaki's board game, the cash flow game. I would encourage you to consider that as well. I would encourage you to look up the This Is Nelson documentary about R. Nelson Nash. If you've never seen that documentary, it's about an hour long. It's on YouTube. Some of his personal friends had put that together, and it's just a good insight to know more about who he was, what he was like, and to give some appreciation. I feel more and more appreciative year over year for the work that the man did that I never got to meet, never got to shake his hand. And again, that's part of the onus that's on me to share information like this, because I'm reaping in fields that I didn't sow in, if you follow me. I'm really just getting not to have to reinvent the wheel, just use the work that he created and then share best practices and experience and help others begin their own journey of becoming their own banker as well. So I would revisit those original key works for sure. And then Nelson makes all kinds of recommendations in his books. And I would encourage you to check those out, to watch his documentary. You can still listen to his recorded seminar. You can get that at infinitebanking.org from the NNI, the Nelson Nash Institute. So again, to my own clients, I want to say congratulations. I want to say happy policy anniversary. If for whatever reason we don't have our next call scheduled, we should always have one scheduled. I don't care if it's that year out from now because we just had it. Let's do that. You can find me at durhamtalents.com. Please reach out to me. Let's get into each other's calendars so we can have a consultation call and strategize about where you're at and where you're going. I'm here for that. And if you've gotten value, here's my big ask, of course, is I'm trying to compile these best practices from 10 years of doing this. And I would appreciate getting a like. I would appreciate even more the comments where there are questions or pointers or suggestions, anything that stuck out to you, any takeaway, aha moment that you've had along your journey, put that down in the comment section below. I'll answer it. I'll respond to it. I appreciate it. Share this information with somebody that you'd like to see win with money. I've actually just recently released an updated presentation, introductory presentation on infinite banking. I'll make sure to have some information about that. It's on our website. It's on our YouTube channel. I could put that in the show notes here, but share that introductory presentation as the first point of contact is my suggestion over the phone or over the computer. Of course, you can point people towards Nelson's book. And then when they'd like to have a conversation, it's my highest honor when I have clients refer a friend, a neighbor, someone from church, their ex. I mean, it just happens. I'm telling you, I love it. And it's my highest honor to get personal referrals from folks that have implemented infinite banking into their lives. I appreciate you. I hope that you found this as valuable as I have found these things to be that I've spent 10 years in acquiring. It's been a great pleasure to bring them to you here. Subscribe if this has been valuable to you, please. My name is Jesse Durham, and I help people live and leave a lasting legacy. Have a great day. Take care. So my wife would be getting, and you should be having those annual going on. You're your own banker, and I'm just encouraging you. I'm just encouraging you to be. So have. And these are just some of the reasons why. My name is Jesse Durham. No, I'm going to get something here. Yeah.